Joining me on the line right now, it's time for the big fat idea. Ethan Dang is with me, portfolio manager of McIver Capital Management in Vancouver. Hey, Ethan, great to have you with us. Tell me the big fat idea.
Good morning, Michael. Thanks for having me on here. So my big fat idea today, it's a currency trade. It is to take advantage of the recent strength in the Canadian dollar to buy US dollars.
Great. I mean, that has got to be a huge topic of conversation right now. People ask me all year long, when's it a good time? Well, we're right back at the high we made a year ago, so it's kind of interesting at this point. What's your recommendation? How do they do it?
So the easiest way to take advantage of the Canadian dollar strength is to play it through an ETF.
Yeah.
So the recommendation would be to look at something like a Horizons US dollar currency ETF with ticker DLR. Mm-hmm. Now that trades on the TSX in Canadian dollars, but what it essentially does is it allows Canadian investors to get US dollar exposure through that ETF.
And what does it hold? I mean, so it's a US dollar investment. Is it in treasury bills, short-term T-bills, something like that?
Yeah, so basically it holds the ETF itself holds US dollar cash equivalent. So it would be like T-bills and very short-term duration type treasuries based in the US. I haven't done that myself, but I think it's a great idea for people because, of course, it's so much easier to do. You don't have to get into the currency sides or the futures market, which is also a great way of doing it. But I'm saying this is more simple for most people who don't have that sophistication. So DLR is the symbol. And, what are I always look at these things and say, is the management fee going to eat up too much of my profit? That's a great question. So the ETF has a MER, or management expense ratio, of about 0.55%. So it's not low, but it's not super high. I would call that average. But if you compare it to maybe your FX spread at TD Waterhouse and whatnot, you may be incurring 1 to 2% on the FX cost there. So in terms of the MER, it's still quite reasonable, I would say.
Okay, and just do you have any idea of what timing you're looking at for this? I mean, so you get involved in this. Are you looking for a particular price point or timing point or a piece of information that may give you a hint, to exit the position?
Yeah, I mean, timing is always a key if you're looking to maximize your profits. The way I look at it right now is with the Canadian dollar sitting at 80 cents, based on, recent economic strength in the Canadian economy. I feel that, or at least our view is that this is temporary. So I would be looking for an entry point anytime now till maybe the next few weeks. Get in when the CAD is around 80 cents. Maybe it'll go to 81, 82. But if you look out maybe 6 to 12 months, our expectation is that the U.S. economy will come back. They'll continue to raise interest rates. Tax reforms, maybe repatriation policies will give the U.S. dollar a boost. So I think there is a trade here in the next 6 to 12 months for the U.S. dollar to come back relative to the Canadian dollar.
Well, interesting stuff, Ethan. I really appreciate you finding time for us on the weekend. Great news. Thank you.
Thank you for having me.
Ethan Dang is portfolio manager, McIver Capital Management in Vancouver.